Hey, what's going on, everybody? So, what I'm going to do today, I'm going to talk about the fun topic that everybody loves, taxes. So, I was asked to talk about this. I have talked about it in the past briefly. Keep in mind that none of the views here, I am not a CPA, nor am I an attorney. So these are my own opinions. So always consult the proper authority or the proper people for the job, which would be a tax accountant, certified CPA, or a tax attorney, or somebody who is certified in some way, which is not me. Please take this as only my opinion. So, here's the deal with taxes. There's so much to it, and a lot of Amazon sellers just simply don't think about it. They, just kind of brush it under the rug and don't worry about it. That's not necessarily the right thing to do, but so let's get into it. First of all, there's some great things about business in general, okay? And I'm going to talk about some of those things today, and again, these are my own opinions, but let's talk quickly about sales tax. It's not a quick topic, but sales tax is unbelievably complicated, and now it depends on who you speak with, because there's people out there that will tell you you need to pay. They'll tell you you need to register in all these states, and you need to remit sales tax in the states that Amazon doesn't collect in. I'm speaking specifically about Amazon. If you do Shopify or eBay or something like that, that's a whole different story. So I'm talking specifically about Amazon FBA, specifically, right? So Amazon FBA, because according to some of these laws that people claim, there was a Wayfair case. You can look that up, but different states have different rules and regulations and different laws and different fees and everything else. So the way it's explained to me that you're going to have 2 different parties or 3 different or 10 different parties on how to explain this, and they're going to have differing views, okay? And I can just tell you what I personally have done or what I am doing and what I'm not doing. So you've got services like TaxJoy, you've got services like Avalara. They'll claim that not only do you have to, if Amazon collects now, because that's their business, they're going to go out of business if they don't have anything to do. And sales tax is what keeps them going. So, they have like 4 states out there that Amazon doesn't collect for. So you could technically register in those states to, collect sales tax and remit it to the state. Which, that'd be a proper thing to do, right? But let's say you sold 10 items in that state. Should you really have to register and collect sales tax? I mean, it seems kind of insane to me, right? So you sold, $100 worth of stuff, and you're going to pay way more than that registering and remitting, and no, it doesn't make any sense. So I think, for me, you have to weigh your liability risk, and it's not very high for myself in those particular states, except there might be one state, like for instance Florida, where it might be very high. However, they don't aggressively, from what I've been told, don't aggressively go after people. Because it has to be a substantial amount of money you would owe, and Florida doesn't really have any nexus laws that I'm aware of. And again, this is what I know. I might be wrong, so don't quote me on this. But they don't have any nexus laws that are specific to how many sales you have and such. But technically, you're supposed to register in Florida, and you're supposed to change it in your marketplace on Amazon to collect sales tax for Florida. So when somebody goes and buys something off of you, they'll pay sales tax. You'll get the sales tax. You'll take that sales tax. You'll remit it to the state, and you'll pay them their sales tax. Okay. But if you haven't sold a ton in that state, are they going to come after you for $1,000 when it would likely cost them $5,000 to $10,000 just to come after you for it? So these are things you got to weigh your tax liabilities. Like, California has been one of the biggest perpetrators of now that Amazon's collecting, which is great. You still have, and I'm not sure if California is one of the states, you still have these places like TaxJoy and Avalara, from what I've been told, and again, this is allegedly what I've been told, is that they are wanting you to still remit in these states, certain states, even though Amazon's collecting. Which makes no sense at all, because Amazon's getting their money, the states are getting their money from Amazon. So, and they're trying to say You might have you have to pay income tax in these states because you have a nexus, because your stuff was stored in an Amazon warehouse, which is ludicrous. So, okay, if you subscribe to that, then you want to go ahead and get with one of these services like TaxJar or Avalara, and you want to file income tax, and you want to file and remit sales tax even though Amazon collects it, and then California gets to charge you with a $1,700, I forget what the actual, but there's other states that do this too, charge you like just a cost of doing business there, right? Which is crazy because you don't live in California. Unless you do live in California, in that case you'll be paying it anyway. Point is, there's no set laws on this stuff, and you'll hear people say that this is it and this isn't it. Depends on what camp you're in. My personal beliefs are Amazon collects the sales tax, and Amazon takes care of it for pretty much every state, except for those exceptions, a few. I don't see why you should have to remit in a state where Amazon already collects it. So you've got to weigh your risk involvement and how much you sell, and could you fight it and could you not fight it? But it would be extremely expensive to fight it. So, I would not personally register with any of these services simply because they're in the business to make money, and they're going to charge you probably more than you owe in taxes when it all comes down to it. You could be paying as much as $1,500 a state to have them file taxes in all these states. You could be filing in 18, 20 states. That's insane. Now that Amazon collects it, there is a big argument to be made that Amazon's responsible and they're collecting it, and you shouldn't have to do anything else with that. So again, it's up in the air. I highly suggest you contact a tax accountant and ask them that is familiar with Nexus, familiar with Economic Nexus, familiar with Amazon. But there's no clear-cut answer on that. If you talk to Avalara and TaxJar, they're going to have their clear-cut answer on it, but they have their own interest in mind. And again, I'm not saying they're wrong or right. I'm just saying this is where we're at with sales tax. So you have to make your own decision with that. It's not an easy answer, and I am not qualified to be able to tell you what to do. Okay, so let's talk about a few other things. Of course, with any business, you have your write-offs. You have your S-Corps, you have your LLC. You should at least have an LLC, and from what I'm told, and again, this is what I'm told, if you get it in Delaware or Wyoming, it's supposed to be safer. And the reason being is because that LLC holds up better in court there. So if somebody tries to sue you for your personal assets, they're less likely to be able to break that LLC and sue you for your personal assets. So you should at least have an LLC to protect your personal assets, okay? So if you haven't done that, that might be a good idea. The nice part about having a business, too, is that you can write off all your supplies you buy. You can write off, if you're doing retail arbitrage, you could write off your gas, right? You could write off your traveling from place to place. You're doing business. You get so much per mile. I believe it's 50-some cents per mile. So you can write off your software you use to search for things. You can write off essentially everything you use for the business, everything that's a valid business expense. And from what I even understand, like if you buy a new computer, you can even write it off in the same year, from what I understand. And again, talk to your tax person before. I don't know if that's true, but I believe that's what I read. So you could buy a brand new computer for a couple $1,000s, and you can write it off, which is pretty awesome. As long as it's reasonable and you're using it strictly for the business, which I just bought a laptop myself, and I'm using it strictly for the business. So, that's a tax write-off. Here's what I love. So I'm a huge proponent in some cases. Now, it would be on a case-by-case basis, but one of my products, actually many of my products, I spend a ton on PPC. And for those of you that don't know what that is, it's pay-per-click. Now, there's a massive advantage there because ad spending you can write that off. So let's take an example here. And here's why I love to be able to spend on ads. Because if I subscribe to a philosophy, right? That if I don't care so much about my margins as long as I do it first, of course, for the product and everything. But if I'm putting in $200, this is what I'm doing right now for one product. I'm putting in $200 in ad spending every single day. On the average, about $200. I'm getting back over 200, usually between $200 and $400 back. Now, probably closer to between 3 and 2. I don't exactly know. So here's the great part about that. Let's say I spend this $200 a day, and that's 7 days a week. That's $1,400 a week. Whatever my tax bracket falls into at the end of the year, okay, I'll be able to write off all that ad spending. So I'll be able to write off the $1,400 a week. Now, I don't get 100% of that back, right? But if I'm in a 30% tax bracket, I'll get 30% of that back if I'm doing the math correctly, unless I'm just completely wrong. But there's other write-offs and other things that affect your overall. My point being is, if let's say I'm in a 20%, let's say I'm paying 25% of my taxes. Let's say I make $100,000 just to make it easy, and I have to pay $25,000 to the government. You know, when it's all said and done. But before all that, you get your write-offs. So my write-offs will be ad spending. So if I spend $1,400 a week, that's $1,400 I take off my tax liability. If I'm in the 25% tax bracket, if there is such a thing, for example, I could take 25% of all that ad spending that I'm taking off, and I would get that taken off my total bill. So it's almost like I'm saving. If I'm in 25% when it's all said and done, for example, I'd be saving 25% of the $1,400 I'm writing off. So I'm getting more money back that way for my write-offs. So you have to think about that. You're spending all this money on ads, right? But are you really losing it all? No, you can write off that ad spending at 100% off of your total. It's a deductible part of your business, right? Because it's a necessary part of your business. So many people don't even consider that when they're doing their ad spending, is that you can write that all off. You know, and you get whatever your tax bracket is, whatever percentage you're paying, you're getting that back for ad spending, which is great, right? Or it might even lock you down to a lower percentage. For those of you that know what I'm talking about, you know, as you go higher and higher, you pay more taxes. So if I make, and I don't know what the brackets are, I'd have to look it up, but if you're making $50,000 and, you know, let's say the first 25, and again, this is just making this up as an example. First 25 might be taxed at 10%, and then everything from $25,001 to $35,001 might be taxed at 15%. Everything from $35,001 to $50,000 might be taxed at 20%. So it goes up for that portion of it that gets taxed. So if you can knock down your, deduct off your ad spending, it knocks you down a bracket and saves you percentage-wise, right? So that's pretty cool. So you got to think about that. It's really a great way to make more money and more sales, but also think about it. You're going to be able to write all of that off at the end of the year. So obviously your expenses, your supplies, everything you buy and sell, of course. And I would definitely recommend getting a wholesale certificate. So if you do read through arbitrage, you can register with these different stores, and you can go ahead and you can get your product tax-free. So if I'm ungated in Nike, for example, I can go buy this Nike shirt, right? And then I can go sell it. But I can buy it tax-free from, let's say I go to Marshall's. I can buy it tax-free from Marshall's, and I can go ahead and sell it on Amazon. Amazon, of course, would collect the taxes, assuming that it's one of the states where they do that, which is almost every state. So it's great to have a business because you can write all these expenses off. And as you get bigger, there'll be more expenses to write off. So if you get consulting, even if you go out to eat and have a business dinner, I believe that's 50%. You can write that off if it's a valid business dinner. So there's just so many different little things you need to know that you'd want to ask your accountant about. Because again, I'll say it again, I'm not an accountant or attorney. I'm not qualified. I'm just giving you my opinion on things. But there's a lot of different ways to do that. So sales tax, you have to decide for yourself. I've kind of been told, unless you're really big, not have to worry about it because they're collecting sales tax, right? Amazon's collecting it for pretty much every state. The big one you'd want to probably watch out for is Florida, because a lot of people make a lot of sales there, so you may want to remit and collect in Florida. That's up to you. But again, that's just my opinion. It's not legal advice. So that kind of covers it as far as the tax liabilities go. Once you open yourself up to these services that claim you have to do these things, you start getting all kinds of crazy requests for money from states. And good luck, because then you've gone down a rabbit hole, and it's not even necessarily valid. I mean, every state has a different laws, and good luck with all that. Yeah, that's all I'll say about that. So hopefully this was informative. You guys can choose to do what you want. As far as trying to think if there's anything else I'm missing, that's pretty much it. I mean, from a tax perspective, it's great to have a business. Now, what I've been listening to lately is Seth Kniep from One Dime, and he has his own podcast show that talks about how you can roll that into real estate or roll it into another investment and possibly save the money you would have to pay anyway to tax this. It's really interesting, and I'm learning, and there's a lot to that. But as I learn more, hopefully we can all learn how to save more money and give less of it to the government, which, we need government. We absolutely need to pay taxes. But if there's valid ways around it, rich people do it, big business owners do it, especially real estate people, you can avoid a lot of taxes by rolling that into another investment. And you don't have to pay the taxes for a long time, or you can delay them. And there's all kinds of different ways to do it, and the tax law is so complicated that normal individuals usually don't understand it, and I certainly don't understand quite a bit about it, but there are some things I do know, and I think it's very beneficial to learn these things because this can save you a ton of money, especially if you're running a business. So you want to educate yourself, you want to learn, go to the valid resources, educate yourself about tax law, because honestly, this is what the people that have a ton of money know how to do. They know how to make their money work for them, and they know how to, pay their share, but their share might be a lot less because they know how to divert it, or they know how to, it's something that people think it's shady, but they're using the tax laws to their advantage when they can, and as long as you're not doing anything unethical with that, but somebody made them really complicated for a reason, so people that have money could keep it, basically, is what I think. Great book, if you haven't read it, is Rich Dad, Poor Dad. Absolutely fantastic book. I highly recommend it. Really goes into a lot of what I'm talking about here. So, at any rate, guys, have a great night. I hope you enjoyed the video. God bless everybody, and we'll talk to you later.